As you can imagine, we've received a good number of questions regarding the market. And since we're seeing many of the same questions and concerns, we thought it might be helpful to share some of the more common ones with you. Now, since I'm hunkered down at home, you may hear a puppy chime in from time to time. That's okay, he's just trying to help. So, our first question is actually from a client who's asking, "Why are you trading so much in my account?" And Gary responded to this by kind of explaining what the process is for portfolio building. And he says, when building a portfolio, part of the process is to determine when to take some of those profits off the table and when to buy more of a security when its price drops. The bouncier the market is, the more likely that we'll hit a trigger point on a high or low side of our target band for a security or asset class. When that happens, we trade to bring things back into alignment. The next question is, I'm 85 years old. I don't have time to wait for the stock market to come back. I'm a little bit worried. What are you doing? Well, as I would expect the market to be back to normal in 2 to 4 years, I'm sure that you'll be around to see it. But if not, then we have to take a look at short term versus long term needs. In the short term, you need the portfolio to be able to support the draws that you're taking from it. These are those monthly distributions from the account into your checking account so you can spend on or for you to spend on food, clothing, and shelter. In the long term, we need the portfolio to grow so that those draws can increase over time to keep up with inflation. After all, you might be around for quite a while longer. But if you die before the market comes back completely, the reality is that you died with excess money. So this particular market downturn will not really have hurt you. In that case, we turn our focus on your heirs and their time horizons, their needs, and their risk tolerance levels. So let's say that you're a happy investor and you have money over in your account that's been allocated to help with those food, clothing, shelter types of things, because we certainly don't want you running around homeless, naked, and hungry. As long as those needs are met, the stock market crash is really in the background. And as long as it can continue to keep up with that money in your account that you need for the draws, it really isn't going to matter too much. Next question is, wouldn't it be better to go to cash and wait things out? We can always get back in the market later once the crisis is over. Now, that would be a really good idea if we knew that the market was going to keep going down. We'd also have to know when that going down will stop and then when to buy in and ride the market back up. In almost every bear market, we have a client or two that go to cash swearing that they'll get back in before the market goes back up again. To be honest with you, I can't remember a single time when they actually did this. Some never got back into the stock market. They locked in the loss and missed all of that recovery. Others, after years of recovery, finally got back in, but at a higher price than when they initially got out. The reality is they missed most of the recovery and got in closer to the next downturn. Is it a good idea to add money to our portfolio? And the answer to that is, well, yes, but it might not be time to put it into the stock market. Realize that a portfolio can be made up of both of a growth and equity section and a safe-ish part. If you don't have a need for the money for at least 3 years, then yes, absolutely, we'd agree that adding money into the growth section of the portfolio is fine. However, if this money is needed in the next couple of years, you would not want to take the risk with it. In that case, you can use a safe-ish mix of investments that would have very little, if any, stock exposure. Just out of curiosity, if I have $2,000 I can play with, would you recommend me buying an airline stock or some other stock? The prices are so low right now. Do you have one or two that you can recommend? It is a good time to invest in equities if, one, you don't need to touch the money for several years. Two, you don't mind investing that money and then seeing the market go down another 20%. Number three, you diversify, or you're happy with the gamble. Now, those first two can be pretty self-explanatory. The last one touches on whether to buy individual stocks or a broader swath of the market. The crisis, like all the ones we've seen before, will leave a trail of broken and failed companies in its wake. It is very possible that an airline or oil or entertainment or hotel or restaurant company will go bankrupt. So what might be better is to get a 30% discount and buy a broad list of companies rather than a 40% discount and only buy into one or two. Now, we understand it can be scary seeing your investments drop by 20, 30, or even 40%. What's important, though, is that we stay calm, monitor the short term situation, but maintain those long term goals and plans. What the markets are doing is normal. It's not common, but it is normal. Any chart of any market you want to look at will show you that these things happen. This bear market can last for a year or more. The recovery can take a couple of years. Again, these are not predictions. However, from a long term perspective, what is happening in the markets right now is actually pretty good. Markets regularly overshoot in a bull market and blow through any reasonable bottom in a bear. Take advantage of that. Buying low and selling high is not a stupid thing. You just have to be patient for that high to come around again. The danger is highest when that concern turns to worry, and then that worry turns to panic, which leads to selling at the bottom. That leads to locking in losses and missing out on any recovery. Still have some concerns? Feel free to reach out to us. While we are following the CDC recommendations of social distancing right now, meaning that we're working from home, feel free to give us a call or shoot us an email. We'd be happy to discuss how this affects your particular situation. Take care.